makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Doha from the Qatar Economic Forum powered by Bloomberg. Now, here's what's coming up on today's program. The French President Emmanuel Marcon tells Bloomberg he's open to seeing a major French bank acquired by an EU rival to boost financial integration. He spoke exclusively to our editor-in-chief, John Micklethwait.
This is a totally new world, and we do need this new business model for the Europeans. More innovation, more investment.
Anglo American announces a massive restructuring, exiting diamonds, platinum and coal in an effort to fend off a takeover bid from rival BHP. Plus, more than 1,000 corporate and government leaders descend on Doha for the Qatar Economic Forum. Don't miss any of our great conversations throughout the day. Now, first thing is first, it is inflation. A happy U.S. data week, actually. It's inflation week, so there's a lot going on in these markets. So first up, let's look at the European markets. You can see they're kind of trade-bound. Now, we did see similar moves when it comes to Asia. Investors, I guess, focused a lot more on the upcoming U.S. inflation reports. Now, if you look at dollar index, always good in these kind of weeks to look at volatility, dollar, but also maybe treasuries. Again, a little bit later today, I think the Federal Reserve Chair, Jay Powell, is also scheduled to speak. Consumer price index, though, on Wednesday, really projected to show moderation while still remaining too high to warrant rate cuts. So let's get on to the cross asset. You can see a little bit of a move sideways when it comes to European stocks. Now, I'm looking at treasuries. I'm also looking at S&P futures. Look at that. They're pretty much flat. Sterling 125.53. We have Brent at 83. And then the other thing that maybe we could watch out for is Japan's 20-year government bond yield rising to its highest level since 2013. Again, there's a lot of speculation, actually, that the Bank of Japan will try and reduce some of the debt buying amounts at its regular operations to try and help an ailing yen. Now, to talk about markets, but also opportunities out there, I'm delighted to be joined by Marc Nachmann, the Global Head of Asset and Wealth Management at Goldman Sachs. Marc, thank you so much for joining us. I'm looking forward to our conversation here, but also on stage, where we talk about some of the opportunities out there and some of the main trends. Now, you're focused on private credit. What are you most excited about, and what are you worried about in this class?
Sure. Thank you for having us. So private credit, we think, is a big opportunity. I think it's a large asset class. I think when people talk about private credit, recently they really think about direct lending, which is senior secured loans to non-investment grade companies, which is a very big business. We think it's close to $2 trillion now. The risk reward in that business is unusually good at the current moment. We're talking 10% unlevered yields on securities that are high in the capital structure, pretty safe. But what I'd say is interesting is what else is going on around private credit overall. And so a couple of emerging themes in the business. First, private credit for investment grade assets, and so that could be securing against a collection of loans, a collection of consumer assets, and so on. And that is a big trend where especially insurance company pension funds are taking a look at the investment grade space, taking a look at going into private credit there, taking a liquidity and getting higher yields.
I mean, it's incredible. Like, private equity has really mushroomed, right? And if you look at, the totality of what it's worth, it's pretty incredible. Do you worry about valuations? And is that why there's opportunity, given the huge interest rate rises in a fairly short amount of space?
It's a good question. I think the key for private credit is that as you invest right now in private credit, you get the chance to do it at loan to values at what you think today's market valuations are. And the loan to values for these new originated private credit deals is pretty attractive. So I'm less worried about where new deals are getting struck, and I think you still get really good risk reward on those.
I mean, I know we're all eyes on the Fed, and it's moved markets almost like I've never seen before. I don't know if it's because they overpromised in December. Does that make a difference to attractiveness in private credit?
I think all eyes are on the Fed. This week will be interesting with the CPI number and retail sales coming out. We continue to believe that the next move by the Fed is a cut, not a hike, and I think Powell was pretty explicit about this last week. It's interesting, as you watch the economy, as you watch corporates, we've just come out of first quarter earnings. First quarter earnings have been pretty good, better than expectations, both on the sales and on the margin side. So we see corporates dealing quite well with this higher rate environment. So we feel pretty comfortable around the environment, around credit risk. Having said that, we're watching it. I think it's key in all credit strategies to be very focused on the best of credits, and that's what our team is very much focused on. I would say that the last 10 years or so have seen very little dispersion in terms of performance in private credit because everything worked well. I would say the next 5 to 10 years will be more interesting. We'll probably see more dispersion, and you'll be able to see good credit work that teams have done and a good differentiation between good investors and people who were just riding beta.
And Marc, you've also just inked a major deal actually with Mubadala in the space. Is that a template for more deals actually with sovereign wealth funds in the region?
Yeah. I think it's very interesting. We did a deal with Mubadala into Asia Credit, which is a growing part of our franchise. We also did a deal with OMERS, the Canadian pension fund for Asia Credit. So we think, we have, when people talk about private credit, they primarily talk about the U.S. and Europe, where we have very big businesses. We're building up an Asia private credit business. And together with Mubadala and OMERS, we're increasing our presence there, and we're pretty excited about their opportunity.
How excited are you about this region? I imagine that this is one of the things you have basically a goal of increasing your alternatives, right, quite significantly. Does the Gulf play a major role in this?
Yeah. Gulf is very interesting. We think it's a growth region. I think it's amazing in terms of the growth that's going on across a number of countries, and we think the region is actually interesting from a number of perspectives. I think people traditionally would think about the region as an exporter of capital, and that obviously played a big role with asset managers like ourselves. But I also think the region is becoming interesting from an investing perspective. I think one of the things to look at is Middle East right now represents about 7% of the MSCI Emerging Market Index. We've done some research and believe that could go up to 10% depending on some other movements in the index, which will bring more international investors into the region. So when you look around the world in terms of growth, I think the region stands out. So we think there's interesting opportunities for us to invest in the region, have international investors come here as well, invest. We're going to launch a number of strategies in the region. So we're excited about the region, both as a source of capital, but also as an opportunity to invest in local markets.
Marc, how difficult is it to choose where you base yourself in the region? Because there's a competition, and we spoke about it a little bit also just in the forum right now with the Qatari PM. There's a little bit, of course, between the UAE, Saudi, and even Qatar. How do you decide where you want to be based?
We've been in the region for a long time, and we've been based in multiple locations in the region. So we continue to work with all the key countries, and are pretty excited about the opportunities set with all of them.
When you look back to private credit or some of the emerging trends actually in markets, I know you've just launched a real estate credit fund.
Yeah,
how do you break it down? Like what sectors to invest in?
Sure. So real estate credit, very interesting. We just closed over $7 billion in funds to invest in real estate credit, which is a very unique opportunity set right now. We see the demand-supply imbalance in the business as a lot of traditional lenders into the real estate market are full up with commercial real estate exposure, don't necessarily want to take more exposure at this point. But there are new, exciting, interesting projects getting done. And so the opportunity to lend into those new projects based on loan to values, based on today's value, is very attractive. So I think we saw a lot of investor interest in this strategy. We just closed this fund, and we're excited about investing it. We've invested, a good fraction of it already, and so we're well on our way on good returns in that fund.
So in what kind of geographies? Is it more geographies, or is it more kind of the actual real estate?
Yeah, so the fund is in OECD countries, and so most of it will be U.S., Europe, Australia, will be the bulk of it. And a lot of it is in real estate plays in transition. Either there are new builds or changes of the functionality of the building, and so we see there, given how few people are lending to the sector right now, we see really good opportunity.
Marc, do you worry about anything being in a bubble right now? We talked about opportunities, but what is there something that you don't want to go near?
Look, I think we're watching, obviously very carefully. We feel pretty good about markets. I think as we talked a minute ago, we continue to believe the Fed is going to cut as its next move. We think that inflation will slowly come down, maybe not as fast as what people in the market expected at the beginning of the year, but we're kind of cautiously optimistic, I would say, about the market environment going forward.
Marc, thank you so much for joining us. That's Marc Nachmann, the Global Head of Asset and Wealth Management at Goldman Sachs. Now, we're here, of course, in Doha at Qatar. The Qatar Economic Forum is underway. You're seeing live pictures of Haslinda's, of course, forum, the session, speaking with Malaysia's Prime Minister, Anwar Ibrahim. So much more to come here from Doha, Qatar. This is Bloomberg.
And I think we can, because why did I meet Khalid Mash'al and Ismail Haniya?
We've chosen France. It's a very, very important hub for us here on the continent. But I'd also say our people like living here. And one of the things in a competitive world for talent is we give our people much more latitude to work and operate out of places that they want to live.
Well, that was the Goldman Sachs Chairman and Chief Executive Officer David Solomon at the Choose France Summit. Now, several European energy giants are thought to be considering moving their primary stock listings to New York in search of higher valuations. Now, that includes the French oil major, Total, with Chief Executive Patrick Pouyanné saying the firm is seriously studying the move. While Bloomberg Editor-in-Chief John Micklethwait asked the French President Emmanuel Marcon if he would be happy to see Total make the move.
Not at all. I would be very surprised. No, I wait for any confirmation. I understood it was rumors, so.
But it's interesting that it's tied to the idea that he would face extra ESG measures here that he would not face in America, and he thinks that would affect his valuation.
Do you mean that we are more serious than the US in terms of green economy and transition?
Yes, but you also, in your speech at the Sorbonne, you said, as I'll paraphrase, you said you cannot let decarbonisation and growth be enemies, and this would appear to be an example.
And this is my point.
Yeah.
But the point is just, we have to be sure when we regulate, we should not over-regulate.
Yes.
And I think now we have to deliver. We need in Europe much more investment. We have to cut red tapes, have more flexibility. The European Union is the most open place of the world. But you cannot survive if at the same time you have subsidies and overcapacities in China and protection in some part of the market, and Inflation Reduction Act and Buy American Act in the US. It doesn't fly once again.
So Europe has got to get tougher now.
But this is a necessity, not because we are protectionists, but just because we want to protect our economy.
The Germans do not agree with you about a lot of this.
I think it depends whom in Germany and for which perspective. It's totally true that some German companies, when they are incorporated in China, for instance, benefiting from subsidies, not just German, European, American, their interest is probably to preserve that and to sell themselves their overcapacities in China to the rest of the world, and especially the European market. But the German economy's interest is totally aligned with the French economy's interest, meaning creating jobs, creating value, but just protecting your business and your people when they are attacked by unfair measures. And it's normal. It's part of the business. So for me, it's just a no-brainer.
Well, that was the French President Emmanuel Macron speaking exclusively with Bloomberg Editor-in-Chief John Micklethwait in Versailles, France. Now, we'll have more of that interview a little bit later on in the program. This is Bloomberg. Well, Veolia shares higher this morning after a confirmed full-year profit forecast. Now, the French environmental services giant is benefiting from increased global demand for water and waste treatment, while a cost-cutting program has also boosted the bottom line. I'm delighted to be joined by Estelle Brachlianoff, the chief executive of Veolia. Estelle, thank you so much for giving us a little bit of your time on earnings day. So talk to us a little bit about some of the things that you've said you want to prioritize. Now, this is growth in the U.S., in the Middle East, and Australia to desalinate more water, but also for the treatment of plastics and the like. Have you put any acquisition targets on the radar?
So you're right. Great result for the first quarter in terms of top line and bottom line, and a confirmation of all the strategic choices we've highlighted with our Green Up strategic plan, which you're right, focus our attention on 3 booster activities and 3 geographies. If I start with the 3 geographies, we're talking about the Middle East, about Australia, and the US. In the US, we already have $5 billion turnover. We've doubled this in the last 5 years, and we intend to double it again by the end of the decade. Because we are really based on a mega trend in the US, which is reshoring and the industries, microelectronics, lithium, gigafactories, as well as the health concern and, of course, the pollutant removal, typically the micropollutant in water. And both, we are very uniquely placed with a worldwide presence and patented technology to address those challenges. So very hopeful and very confident, actually, the future of Veolia.
Estelle, do you worry a little bit about a change in policy if there's a change in administration in the U.S.? And what does that mean for possible acquisition and possible growth in the United States?
So actually, as a chief exec of Veolia, I would say, irrespective of the result next November, the mega trend I've just highlighted, reshoring and building in America, the chips manufacturing, as well as, say, pharmaceutical and strategic industries like that, or health, those are mega trends which, whatever the outcome of the election, are here to stay. So for Veolia's business, it basically won't make a difference. And I've mentioned as well the Middle East, and you're in Doha, so I just wanted to highlight a big contract we've announced this morning, more than $320 million desalination plant in the Middle East, in ASEAN, which will be a worldwide most energy efficient desalination plant in the world. So innovation here is helping to save energy and water. That's exactly what Veolia is about.
There's also a little bit, of course, you have a long-term project to recycle EV batteries. Now, in the last couple of months, there's been a bit of a slowdown when it comes to electric vehicles in Europe and elsewhere. Does that affect your longer-term plans for that unit?
No, it doesn't, and you're right. We already have 5 units of battery recycling in Europe, in China, and we have some project in the US as well. And we are finding back the lithium, the cobalt, the nickel, which are within those batteries, and scrambling them, if you want, to put them back into another loop of production. The reason why I mentioned that is, of course, a unique technology which helps us to do that, what we call hydrometallurgy, which means that instead of importing nickel, cobalt, lithium, and all the strategic metal, we are finding them in our wasted batteries, the batteries from electric cars, the batteries from cell phones, which means that we're talking strategic autonomy here and independence. So again, we're not finding it only in electric cars, in other stuff, and strategic independence, something which is at the forefront of, say, EU legislation, and actually there is an obligation for gigafactories by 2030 to have a certain amount of recycled of those metals within the gigafactories. So it's supporting our growth in this industry. So globally, the answer to your question is no, it won't have any impact. We still are very confident about this part of the business.
We're almost running out of time, but I also wanted to ask you about one of the resolutions that was adopted at your AGM last month, which is basically capping some of the shareholder rights to 10% Is that because you're worried of an activist investor, or have you been approached by an activist investor?
No, it's actually the opposite way around. It's a way to protect shareholders from potentially taking only a small share of Veolia and not doing a total takeover, and therefore preventing the other shareholders from benefiting from the premium. So it's a pro-shareholder resolution, and that's why it was very, very well voted at our AGM. Actually, 86% of our shareholders voted pro this resolution.
Thank you. I want to thank you so much for joining us today. Always a pleasure to speak to you. Estelle, the chief executive of Veolia. Coming up, of course, Bloomberg Intelligence says takeover bids could be on the cards for France. Our conversation with our editor-in-chief. Now, the French President Emmanuel Marcon tells Bloomberg he's open to seeing a major French bank acquired by an EU rival to boost financial integration. He spoke exclusively to our editor-in-chief, John Micklethwait.
This is a totally new world, and we do need this new business model for the Europeans. More innovation, more investment.
Anglo American announces a massive restructuring, exiting diamonds, platinum and coal in an effort to fend off a takeover bid from rival BHP. Plus, more than 1,000 corporate and government leaders descend on Doha for the Qatar Economic Forum. Don't miss any of our great conversations throughout the day. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacquette here in, you've guessed it, Doha, Qatar. Now, a couple of things that we need to watch out for. GameStop and AMC Entertainment, two of the most prominent companies from the meme stock rally. Remember that, 2021, both surging in U.S. pre-market, continuing Monday's rally. I'm looking at GameStop, we're gaining 39%, AMC gaining 39%. Now, it follows a return to social media by Keith Gill, yes, known as Roaring Kitty. He originally rallied day traders on Reddit in an effort to squeeze short sellers of GameStop. Shares in the company have since lost more than 60% of their value, and AMC is down more than 99% over the same period. Now to our interview of the week, and Emmanuel Macron says he'd be open to seeing a major French bank being taken over by an EU rival in order to spur deeper integration. Now, we spoke exclusively with the French president as he hosted a global investment summit in Versailles. Well, he told our editor-in-chief, John Micklethwait, that the region's only chance to go toe-to-toe with China and the U.S. is to better protect its interests and reduce regulation.
We have to completely reset our model. I think now France clearly is one of the leading economies. We are number one in attractiveness. We've been number one during the past 5 years. And if you take job creation, growth, we are one or second in the Eurozone.
Do you think you're being held back by the...
We are here. Now when I take Europe and especially the EU as a whole, but it's true as well for UK. We have this issue in terms of business model. Why? Because we had low-cost energy thanks to Russia, production thanks to Central and Eastern European countries with quite low costs, a market for exports, China, and a geopolitical umbrella, US. These pillars are being completely revised. Totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reforms is to accelerate decarbonization and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and my view, I mean, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on the capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's and definitely the Eurozone's most successful bank, worth $80 billion. But you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several issues.
You would like to see BNP take over one of these, take over a German bank or an Italian one, if it was possible.
I mean, we do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. You know, energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union to have a single system of resolution, a single supervision, and a much more integrated capital market union.
But would you be happy with, say, Spain's Santander coming and buying Societe Generale as part of that?
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union. It's already on track. Now we have to do it for capital market union, which is broader
more difficult.
and even more difficult, but we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement. But why? I want you to just understand the challenge for us. 75% of our financing as Europeans go through banks and insurance. So we need much more consolidation, but we need a clear circulation of the savings all around the place. This is the first objective, to be much more efficient and to be sure that our savings will be invested in the right sectors and the right geographies. Second, every year, 300 billion savings goes to finance the US economy because we are not attractive. So in parallel with this capital market union and the simplification, having an actual single market, we clearly need the same level playing field as the US in terms of financing, which means when you take solvency and Basel, as long as it's not implemented by the US competitors, it should not be implemented by the European competitors. Otherwise, this is a killer for risk-taking, because these regulations just prevent you, our banks, from investing in equity, which is exactly what we need. And if you take the key driver of this difference between the US and Europe, the key driver is the fact that the US economy innovated and invested much more in equity and innovation than the European economy.
The French president there, Emmanuel Macron, speaking exclusively with Bloomberg Editor-in-Chief John Micklethwait, who joins us now. So, John, first of all, congratulations on the interview. It was extensive. You got a lot of news out of him. What was the thing that struck you the most?
I think, well, first of all, to apologise to the viewers to see 5 minutes of me and then I reappear. But I think the crucial thing is Emmanuel Macron has concentrated largely up to now in trying to change France. I think now he is aiming at something much bigger, which is to change Europe. And it's all about, from his perspective, Europe has not thought about China and America. It has not fought against them using their tactics. He thinks America is cheating, it's using the IRA, China is always pushing things through. Europe, in his view, has to kind of butch up. It has to get much stronger and tougher. And if that means making certain changes inside Europe, that's part of it. But it's all part of this idea that he wants to change Europe as well.
But John, I was really surprised, actually. He told you that, he'd be fine with a foreign bank coming in and getting one of the French banks. I mean, this is France. France always kind of tried to protect their industries or their jewels.
I have to admit, I expected him. I asked him whether he would presumably support the idea of BNP, Europe's most valuable bank. If it went to go and buy an Italian or a German bank, that sounded wonderful. And he said yes. When I said, well, what happens if Santander comes back and they bid for Societe Generale? He said, well, that's fine too. And I think that is a change, because you look at Macron's history up to now, you know, he always talked this big European talk, but in practice, he's still usually been French. If you go to Berlin, they will say, well, look, Emmanuel Macron always makes these big speeches, but he's someone who blocked a supermarket takeover on the basis of national security. He won't let the Spanish do their power construction. He blocks another Canadian thing. He's always, when he talks about European champions, he's thinking about French champions. Well, in this case, not. You know, he's saying, look, I want banking union, I want capital markets union. I'm prepared to put all these things into play, and I think that is a change. I would argue it's the right change. It's long overdue. If you look at those banks, they're tiny. BNP has done amazingly well. It's only worth 80 billion. I think JP Morgan is worth 550 billion. Bank of America, 300. These are many times bigger, and Europe has fallen behind. He does want to compete.
John, I mean, it's complicated, or at least the chief executives of big oil majors will tell you it's complicated being listed in France or in the UK. Yes. And so we heard from Total saying he's also looking at possibly listing to the US. What did the French president have to say?
He said he was very disappointed by that, in a way that probably I would not like to be Patrick Pouyanné hearing that disappointment. But he also said he didn't expect it to happen. And the problem there is what Total is saying is, look, we love France, that's our home, but if we move to America, we get away from a lot of that ESG stuff that Europe is doing, and our valuation will go up. When I say move to America, take their primary listing there. And that is the kind of core of it. In this big speech at the Sorbonne earlier, Macron delivered this sort of fusillade against Europe and how useless it was and how sclerotic and it needed to change. But he's always included climate as one of the areas where Europe should both be competitive but also hold very firmly to its principles. And in this case, he doesn't show any sign of backing down. So Total isn't in any better situation. There's not an obvious way you can square holding people accountable for green stuff whilst at the same time wanting to promote that there's going to be difficulties for banks, for energy companies and others.
I mean, a lot of the other European heads of state will say, well, Macron's a dreamer, right, because he's talking about integration. Like, does he have much support with the rest of Europe?
I think the answer is he has a kind of, potentially, yes. But he has a huge amount of scepticism, a little bit because of his habit of making these big speeches, but secondly also because people didn't trust France. Well, maybe, look, he is doing stuff on mergers now. But underneath it all, you've got this real problem that everyone's looking at their own interests. And his big bloc is the Germans. Because when he says, let's be tough on China, Olaf Scholz suddenly looks over his shoulder and wanders off somewhere else. There is not the same, and apart from the else, there is not the chemistry between Macron and Scholz that there have been historically between Franco-German leaders. So his ability to push this through, he will have to form a coalition of other people. And the one thing he has going for him is that he is basically right, at least in one respect, is Europe is falling behind. You know, France has grown more than most other European countries. It's still only grown at half the rate that America has. That in the end, is not a competitive position.
John, I also want to talk about Ukraine. Now, you just got off stage where you spoke to the Polish president, President Duda, and this is what he had to say on Ukraine.
We must not allow that Russia wins in Ukraine. Once again, let me repeat. The free world must not, I believe, allow Russia to win the war in Ukraine.
Well, that was, of course, the Polish president, President Duda. And John, he was very clear. We can't allow Russia to win this. But, you know, on the ground, it's not that easy. And again, a lot will have to do on who wins the presidential election in the U.S.
Exactly. I pushed him quite hard on Donald Trump because he has always been a friend of Donald Trump, if we can put it that way. He went to go to see Trump the other day, but you have Vladimir Putin patently. One of his main strategies is to wait until Donald Trump comes in the White House in the hope he will get a better deal. And the reason why this is so difficult for people like President Duda is, on the one hand, he instinctively feels comradeship with someone like Trump. On the other hand, from a Polish perspective, if Trump gives in on Ukraine, what does that mean for other places? Because what he is saying, very visibly, what Duda is saying, is if Ukraine goes, us, the Baltic states, we will be the next people in Vladimir Putin's diet.
As always, thank you so much for joining us. That was our Bloomberg Editor-in-Chief, John Micklethwait, and I think he's interviewing a couple of other heads of state this week. Now, let's also recap Tencent's earnings, which were reported a short while ago and met estimates. Revenue, 159.5 billion yuan, a touch above estimates. Again, Naspers also gaining on Tencent earnings. So Naspers, just a reminder for those that don't know the story by heart, owns about 25% of Tencent. So pre-market, actually not pre-market, Tencent gaining some 30%. Coming up, we also have our exclusive interview with the U.S. Treasury Secretary, Janet Yellen, on trade tensions with China. That's next, and this is Bloomberg.
It's been actually a very long process, and especially in the past few weeks, we have seen some momentum building, but unfortunately, things didn't move in the right direction. And right now, we are in a status of almost a stalemate. Of course, what happened with Rafah has set us backward a little bit. Probably there is no clarity how to stop the war from the Israeli side. I don't think that they are considering this as an option.
Well, that was Qatar's Prime Minister speaking at the Economic Forum here in Doha. Now, staying with geopolitics, and the Treasury Secretary, Janet Yellen, says China could always retaliate against any steps the U.S. takes to protect its critical new industries. Now, Yellen declined to confirm Bloomberg reporting that the Biden administration is about to hike tariffs on Chinese goods, including electric vehicles. Well, she told us exclusively about the president's thinking on trade tensions.
He believes it's unacceptable, as I do, to be completely dependent on China in these areas. And he wants to make sure, given that China is really not playing by the rules, in the sense they have enormous subsidies in critical areas of advanced manufacturing, has resulted in overcapacity. He wants to make sure that the stimulus that's being provided through the Inflation Reduction Act to support these industries, and these are industries that are creating good manufacturing jobs in parts of the country that have been overlooked or have suffered from deindustrialization in the past. The president wants to make sure that he protects these investments. And I don't want to get ahead of the 301 review on tariffs, but this is a commitment that President Biden has made, and I agree with it. I was in China just a couple of weeks ago and made clear that we would not allow Chinese overcapacity to harm our emerging industries.
Does the U.S. want a trade war, though, with China?
We believe that we should have a deep and productive, and that we do in most areas, trade and investment relationship. We're working to stabilize our economic relationship. We do not wish to disengage from China economically, but we do think that the playing field should be fair. And China engages in unfair practices like massive subsidies of industries they've decided are critical. And those are cases where we will act to protect ourselves.
We've seen Beijing in the past, though, respond, and it's become tit for tat. Are you expecting a response? Could they go after Tesla or maybe American farm products?
Well, President Biden believes that anything we do should be targeted to our concerns and not broad-based. And Hopefully, we will not see a significant Chinese response, but that's always a possibility.
Well, that was the U.S. Treasury Secretary Janet Yellen speaking exclusively to Bloomberg's Anne-Marie Herder. Now, coming up, we have many more corporate news. It's a major battle, also in the mining industry. Anglo rejects another takeover offer from BHP, proposing instead to exit its coal, platinum, and diamond businesses. We'll have the latest next, and this is Bloomberg. Now, Anglo American is planning one of the biggest shakeups in its 107-year history. The miner says it's planning to exit its diamond, platinum, and coal businesses as it seeks to fight off a takeover approach for rival BHP. Now, let's bring our Bloomberg Commodities editor, Brian Wingfield. Brian, so what exactly is happening here?
Hi, Francine. Well, Anglo is basically saying that it's willing to slim down its operations in order to fend off a bid from BHP. This would be BHP has offered a takeover twice already, and Anglo is essentially saying it will do some of the things that its investors have asked for in the past in order to not accept that bid.
So why does BHP want Anglo so badly? Is it all about the copper?
It is all about the copper. Copper is a key element to the energy transition, and Anglo has a large copper mine, and BHP effectively wants that. Anglo has previously said that the offer that BHP made was too low, and so what it's doing now is trying to see if shareholders will essentially buy into some of its plans to slim down its operations to keep the company a little bit more focused as it goes forward. So what it's doing is
Brian,
saying
talk to me about exactly what happens here. Right. Sorry, Brian, I cut you off.
Sure. No, Anglo is saying that it will divest its diamond and platinum and coal mining operations, and it's also agreed to slow spending on a fertilizer mine in England. This is something that investors have wanted in the past, and essentially Anglo is saying that it will go this route in order to fend off the merger bid.
Thank you so much. Our Bloomberg Commodities editor there, Brian Wingfield. Now, the Qatar Economic Forum, powered by Bloomberg, started in Doha today. We've, of course, heard from the Qatari Prime Minister, Poland's President, and the Malaysian PM. Coming up next, the HSBC outgoing Chief Executive, but also Chief Executive Franklin Templeton.